It's Wednesday, January the 8th, and I'm David Song, currency analyst with Daily Effects, here to cover a few things ahead of the key event risk that we have on tap for the remainder of the week. So, of course, we'll be watching non-farm payrolls on Friday, followed by or just ahead of the ECB, as well as the Bank of England interest rate decision on tap for tomorrow. But given the better than expected ADP employment report that we saw earlier this morning, does bode well for NFPs on Friday, and it looks as though if we do get a blowout print, could be very meaningful for the US dollar, especially as we do see the Federal Reserve start to move away from their easing cycle. So looking at the Dow Jones FXCM US dollar index, guys, at a very critical juncture at the moment, still looks as though we have near-term resistance right around 10,716. However, I am taking note of this bearish divergence, which appears to be taking shape in the relative strength index. If this continues to pan out, might be suggestive of a larger correction that could come about. But again, we'll see what we get in terms of NFPs. Might see the dollar just hold this tight range ahead of then. So we'll keep that in mind. But again, resistance still at 10,016. If we get a topside break, might see a little bit more of a meaningful correction of that July decline. But for now, I think we're going to have to wait for the numbers to get a little bit of a clear picture for the near term. However, British pound remains very resilient today. Of course, we have the Bank of England tomorrow. Not expecting much, especially after the recent rhetoric that we got from Governor Mark Carney, the more hawkish tone, and current market speculation. Of course, the Bank of England will indeed implement that exit strategy ahead of schedule. So we'll see how the policy outlook continues to take shape over the coming months. But for the most part, guys, right now looking at the pound dollar, it looks as though we might have carved a higher low just ahead of trendline support, which dates back all the way till July since Mr. Carney came in. And right now it looks as though we might see another run at 165.50 into the 166 handle. We'll see what we get from the Bank of England tomorrow. Largely, if they don't shift their policy, we probably won't get a statement. So might see sort of a muted or very limited reaction to the BOE tomorrow, but nevertheless, looking at the technicals, as we have, or appears as though we got a higher low in place, certainly we'll be watching the top side as price as well as the R side retains a lot of the bullish trends that we've been watching for quite some time. But guys, with that in mind, some of the themes to watch, especially for the UK, of course, is going to be whether or not inflation is going to remain above that 2% target. But right now, some of the growing concerns there, of course, rising home prices, as well as this ongoing expansion in private sector credit, whether or not that will certainly fuel another asset bubble in the UK. And we'll see whether the Bank of England will look to target that. But for the most part, it looks as though, based on the technicals, some of the data, and even on the fundamentals, looks as though we're going to have to look a little bit higher for the British pound and continue to target these topside objectives, at least over the near term. But on that, guys, again, ahead of these key event risks, just be very careful and be very prudent. Markets could get pretty quiet ahead of then. So with that, guys, as always, good luck on your trades and stay prudent.